Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for October 21st, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. In the previous session, we saw price rally within a tick of that 2144.75, which is the level we've had on the screen since early September after the impulse move down. That's been a major mid pivot for this key range, and that's where prices have been chopping around. We've seen price chop below it, we've seen price chop above it, and now we're chopping back below it. Again, this is just a holding pattern heading into the election. At some point, all of this energy will be released, perhaps in both directions. After the election, you may see this thing come down, then you may see it go up, or you may see it go up, then come down. Whenever you have a very narrow range the way we do, oftentimes you see the market test both sides of the range at some point before directional conviction is seen. So we could see more volatility and more chop. I continue to tell our traders in the trading room that despite the poor swing trading conditions that we've been seeing, intraday swings have been pretty decent. And yesterday was case in point with multiple swings up and down within the range, which were very tradable. You can see a couple of key levels. The previous week's close price, a very important level on the downside, and then you have the 45s on top being a very important level on top. Outside of that range extends above or below to the next key level. For example, above 45s could open up a return back toward 58.5. Below the previous close opens up a big test back toward 21.20 and perhaps the previous week's low. But right now those are short-term directional swings. We really don't have anything with major conviction on a longer term basis just yet. Looking at an intraday chart right now of the ES, again, as mentioned before, 2144s, 2145s, very important resistance up here, but 38 to about 40 has been major resistance before we even got to that level. And you can see yesterday more selling pressure in that area. Additionally, 2126 down to about 2127. That zone has been support. So we could continue to see these edges tested, and you can see returns back up or back down within the range until we see expansion from this range. So failure to hold 2126 could be significant, as it could lead to a key test down below between 2120 and 2119 before we see another bounce. So keep an eye on this range very closely. I say it's a fade the edges type of early session here, where if it comes down to this edge, it could be a fade back to value. If it rallies up to this edge, it could be a fade down to value. But again, outside of this range, sparks expansion. All right, let's take a look here at the crude oil chart. Here's crude oil. You bring up a higher time frame here view. One thing about crude oil is that after the major rally we've seen from that tightly coiled pattern here, where price coiled up, eventually saw expansion, we've just sat up here on these highs. And not only have we sat at these highs, we haven't seen much of a pullback, and we haven't seen any continuation to new highs. Price pushed into 52s only one session. It was the first time we had tested that price level since July of 2015, and those prices were rejected back toward the previous week's close. We have a clear trading range from 49 up to 52, and right now we're basically at the center of that range. So we could see trading to the edge or down to this edge and then fade back. So right now we're in a trading range market. After the squeeze, we're still pushing up, so pullbacks are likely to be defended until proven otherwise. 49 still a big level to defend for bulls. Otherwise, failure to hold 49s opens up a return back toward composite and micro composite value. So right now, again, not a whole lot to really draw from on the swing basis just yet. We're holding in this range. And eventually, again, we could see a resumption of that move as long as 49 holds. Now, if we take a look at the intraday time frame, you can see here the previous couple of sessions we had trend day structures where we trended up and then we trended down and ran those stops. So right now, after 2 days of trending behavior, we could see price settle into a range today. And already we've seen kind of a range develop here where we've traded back and forth. That was the expectation yesterday. In the trading room, after we saw the impulse move up and down and back to the midpoint, I mentioned this is the impulse range to watch right here. We could see price just trade in this range the rest of the time. The one time it tried to get outside this range here in overnight trading, those late bears were squeezed back up. So right now we have a trading range, basically from 51.20 down to about 50.40. Look for price to trade in that range early on. Outside of that range can lead to a move to the next key level above or below. All right, let's take a look here at gold futures. Here's gold. One thing that's important about gold is obviously we've seen the squeeze, modest squeeze up from those recent lows, but we haven't really seen a continuation. It hasn't been an emphatic move. You can see right here that price finally got above 68s, and that's the level I've been talking about. If price can get above 68s, we could see a nice continuation up to 80, 1290, and 1306. And we got to push up, and then we're not able to see a continuation. Prices auction back down, and now we're seeing a little bit of a buyers come in. So right now we've seen this thing kind of slowly try to push higher. I still think that given the fact that these 44s, 45s held very nicely, and we're finding higher lows even very quietly, I think it still leads to a potential push back up toward 1306, in short term at least. Now any failure to get back above 1266s, 1268s could be quite concerning, so keep an eye on 68s today. That's the key pivot to watch. All right, lastly, let's take a look at the NQ. Here's the NQ in a daily time frame. Overall, this one's been quite bullish, holding at highs, but the 48.40 level has been very, very important. It had been resistance. Price tried to hold above it and failed, and now we're doing battle around that area. Closing back above it for the first time here in a while yesterday. Outside buy candlestick pattern where the low is below the previous low, the close is above the previous high. That followed an inside day pattern. This type of pattern seems to imply a retest of the recent highs, but again, it all depends on 48.40, which is the major key level to watch. And you can see prices are just chopping around that level. Any failure to hold above that level retests the previous week's close at 48.02, and holding above 48.40 guns for 4,900. So again, not a whole lot of swing directional conviction at the moment. We still continue to trend higher. Pullbacks are still buying opportunities. But again, in the grander scheme of things, we're just in a holding pattern heading into the election. All right, let's take a look at the intraday time frame. Here on an intraday basis, you can see basically prices holding just below the previous session's close. Bulls came in and defended very nicely the previous week's close. As a matter of fact, we were able to get this squeeze in the room just before it happened, and it was a very nice bounce off that level. Now, seeing weakness above the previous session's high and close could open up a return back across the range into 4,800. So keep an eye on 48.40 as we head into the rest of the day and the weekend. Everyone, have a good Friday, and I'll see you soon. Take care.